Hey everybody, I'm Jason Flurry. I'm the president of Legacy Partners Financial Group, and I'm here with the first update of 2017 to give you 4 things to keep an eye on as we head into the new year that may affect your money. Now before I do that, let me take just a minute and recap where we finished in 2016. You may remember back in January of last year that the market sold off pretty severely. We saw as much as a 20% decline in small stocks there in just the first few weeks of the year. But fortunately, things stabilized. And by the summer, we were just kind of waiting to see what the Fed was going to do and to see what the outcome of the election would be. And of course, after the election was determined, the markets took off. But is this market increase, is this rally something that we can depend on and be excited about? Or is it something that we need to be concerned with? So if we kind of look at the details of what's been moving everything, you can see that the majority of the gains have really come just from 2 areas: the financial stocks and the energy sector. The financial stocks like Goldman Sachs, which is up over $70 a share in just the last couple of months, have really benefited from the thought of deregulation. And so about a third of the companies that are inside the S&P 500 are financial related, and they had about a 17% increase between the election and the end of the year. So that really caused the averages to jump higher. Now the other area is the energy sector, and they're also anticipating some deregulation. So that is about 8% of the overall market, and it went up about 9% from the election through the end of the year. So those 2 areas have really been driving everything, and we may see those areas continue going into the new year. But here are 4 things to keep an eye on as we look ahead. And the first one has been in the news lately, and it's the Dow Jones average knocking on the door of 20,000. Now we're almost there, and we've been trying to get there for about 3 weeks, but the market has just not had the energy to make it. Now I've been doing this a long time, and I remember when the Dow crossed 3,000 and 5,000 and 7,000, 10,000. Now here we are at 20,000. And it's not so much that the number is significant, although it does make the news and it does catch a lot of people's attention, but the number is just an emotional barrier. But that emotional barrier does require a little bit of extra energy to break through. And if we see the market just kind of hang around that number for a little while, back and forth, that's kind of one indicator of strength in the market. But if we see that energy just press right through that ceiling, and we're at 21,000, 22,000, we're really going to see a lot of energy that could push that market forward. And that would be a good sign. Every 1,000 points that we see on the Dow average now, as a percentage, is really not as much as it was, obviously, in the past. So it's really maybe only 4, 5, 6%. But nevertheless, it's an emotional thing to keep an eye on, and it's likely, of course, to be in the news and to get a lot of people's attention, at least for a little while. The second thing to keep an eye on is the price of oil. Oil has been all over the place, as you know, in recent years, and if oil were to go down substantially, that could have a major impact on some industries like the fracking companies, and it could put a lot of the junk bonds in distress, which could also have ripple effects through the financial markets. Number 3 would be Europe. There's a lot of political instability, and there's a lot of financial instability there. And with that being such a major market, it's going to have impact on world markets everywhere, depending on what goes on there. So that's an item to keep an eye on. And then the 4th thing is China. China is a huge trading partner with the U.S., and depending on how the Trump administration works with them, that's going to determine maybe a lot of the movement within some of the areas inside the U.S. economy. But also, China is in a significant real estate bubble. And you've seen these bubbles in the past. They don't end well. We don't know when they're going to end, but they usually don't have a happy ending. So that could have an impact on world markets, including ours as well. So those 4 areas are things that I'm going to be keeping an eye on, and I wanted to just bring them to your attention to kind of help you decipher the kind of the news that's out there, because so much of that news is just noise, and don't let that distract you. You have way too many blessings to be worried about that. And if you spend more time this year counting your blessings than counting your money, you're going to be way happier. It's the only way I know to be happy and to stay happy. So that's where my focus is going to be this year. And I've got a lot of updates planned for you here later on in the year, including some in-depth teaching on just how money works. I give you some simple, easy to understand tutorials and lessons on how to kind of connect the dots financially so that you'll have a more prosperous year and you'll be able to benefit your family and really just enjoy your life more and the role of money in your life. So thank you for joining me, and I look forward to seeing you on the next update. Happy New Year.